Money FM 89.3, the best of the afternoon update.
Welcome to Industry Insight. I'm your host, Lynn Lee. Now, mention the word crypto today and you'll hear everything from cautious optimism to strategic intent. It's no longer just something people are curious about. It's entering broader conversations in asset allocation, digital finance, and innovation strategy. Now, from the US launching a strategic Bitcoin reserve to Singapore rolling out a stablecoin framework, headlines have signaled a shift. Crypto is maturing into a conversation that's increasingly relevant whether you're overseeing portfolios, driving digital transformation, or evaluating long-term risk exposure. And yet, for all the noise, the real question is, how are investors in Singapore actually responding? Today, our focus is on crypto, and joining me is Mark Wong, Head of Trading at Independent Reserve Singapore. Now, the firm just released its 5th edition of the Independent Reserve Cryptocurrency Index, or IRCI, an annual deep dive into crypto awareness, adoption, confidence and trust among Singaporeans. Mark, great to have you here.
Great. Thank you for inviting me, Lily.
Now, let's kick things off with the IRCI itself. For those new to it, what exactly is the IRCI and what are some of the big takeaways from this year's edition?
Sure. The Independent Reserve Cryptocurrency Index is an annual survey of 1,500 Singapore residents. It's an unbiased sample. It's designed to represent the nation as a whole. It's our 5th year conducting the IRCI in Singapore. And I think the key takeaway here is that cryptocurrencies is taking roots in Singaporeans' financial consciousness. Awareness about digital currencies have reached an all-time high at 94%. Singapore itself is experiencing quite a distinct phase in the crypto cycle. And I think it's an opportune timing that you called it as Bitcoin just traded in an all-time high today. So there's been a selective bull market in terms of what assets have gone up, and it's been driven a lot by strategic profit taking, as well as there's some portfolio rebalancing that we have seen.
All right, it's fascinating how sentiment continues to evolve, and crypto might not be dominating headlines the way it once did, but clearly it's becoming more embedded in serious investment strategy. Let's talk about awareness at 94%. Wow. But having said that, the ownership figure dropped to 29%. That really stood out. You'd think with crypto prices rebounding and Bitcoin hitting new highs, we'd see a surge in participation. But the data shows the opposite. What's happening here?
Good question, Lily. So I think there have been a number of reasons for this. One is people are just taking profits and rebalancing portfolios in sort of a bull market. Some are just rotating their capital. We found that 49% have sold part or all of their holdings in the last year, of which 67% have taken profits. And investors are selectively managing their risk as well. So some of them have moved to cash savings. Those respondents, 42% people have put in fixed deposit last year, whereas this year we see a number at 49%. That goes to show that I think amidst the current macroeconomic climate, there's a little bit of instability involved in the economic conditions. People are a bit more cautious and more are moving to what they think are safer assets, and just a perception overall. But Bitcoin trading at where it is, again, there's another factor that people just don't want to buy at where it's currently at, right? So for them, the risk-reward ratios may have changed and they want to reallocate and rebalance their portfolio.
Now, speaking of that, Singaporean investors reallocating, you were saying that they're moving towards other things. Are we talking about fixed deposits or even gold?
Yeah, fixed deposits is one of the ones that gain quite a big percentage. We also see some who are investing in REITs and ETFs. I think in general, that's a sign of higher interest rates out there in the market. Higher interest rates reduces global liquidity. It encourages savings in a way, and it sort of discourages risk assets.
That makes sense. And many investors are getting more conservative in how they position themselves. But with this shift happening during what you describe as a selective bull market in the report, do you expect more selling pressure in the coming months, or are we likely to see re-entry as the dust settles?
Yeah, so according to the IRCI, 17% of Singaporeans are likely to buy crypto within the next 12 months. This is down from last year. So we do feel that at these prices, it may be a bit prohibitive for Singaporeans in general. But overall, we are enthusiastic about a long-term view of the nature of the product.
Okay, let's move on to how we talk about smarter portfolios and in terms of investor maturity as well. What's encouraging is that the data shows increased sophistication, with investors seemingly getting more deliberate, owning 2 to 5 cryptocurrencies, staying away from over-diversification. What's your take on that trend?
I think that there's been a flight to quality assets. Asset prices have moved quite a little bit, and I think Bitcoin has been the dominant outperformer. So people who have owned the smaller subset of group who own like the 11 or more cryptocurrencies have actually reported lower profits, and less of them made money compared to the group that has only bought 2 to 5 types of cryptocurrencies. And it turns out that being more selective in what you're investing in is better for the bottom line.
Okay, so it really feels like the FOMO phase is behind us. People are picking quality over quantity. And I think that is a major sign of the market maturing, isn't it?
Yes, I would agree on this.
Now, let's talk Bitcoin. Despite the volatility, 62% of investors believe it will stay above $100,000 by 2030. What's driving that kind of conviction?
It helps that we are currently trading at more than $140,000. So in itself, it's a bit easier to predict, something that's consistent. In 2023, Bitcoin prices were a little bit lower. So people are still bullish overall in the asset class, and some people are starting to purchase it as like a long-term investment. So I think that Bitcoin has provided a better, higher Sharpe ratio than S&P as well as gold over the last 5 years. And this makes a strong case that it should be seen as an alternative investment. And I think there are also other there are family wealth managers, famous one being Yield Endowment Fund and other university investment funds, that are taken to investing in Bitcoin and other cryptocurrency assets. So it's not just cryptocurrency players that are involved. Traditional finance is starting to take a look as well.
Okay, do you think that macro uncertainty as well with tariffs, inflation and geopolitical risk, that Bitcoin is taking on more of that safe haven role?
So we feel that there is a lot of trust in Bitcoin. The Bitcoin supporters believe in some of the Bitcoin buyers, the crypto investors and respondents in a survey. They cite important factors such as transparency, the decentralized nature of Bitcoin, as well as network resilience. I would like to touch again on network resilience. I think it's an important factor. I think legacy is a very important factor in why people buy assets that are safe. Bitcoin has been around for the last 16 years, and gold itself, as we know, has been predominantly legacy is a very important part as the gold success as store of value.
Okay, I want to pivot to stablecoins because this year's report makes it very clear they're moving beyond just trading. What's driving their growing use in real-world applications?
So a stablecoin is potentially a token that is pegged to a fiat currency such as US dollars or Sing dollars. What's driving that demand? Previously, the case was that people were using it as a store of sort of like an asset where they hold it as a trading intermediary. So they hold a stable coin for the purpose of buying Bitcoin, for the purpose of buying some other cryptocurrency assets. And then if they are using it as an in and out kind of mechanism for trading. However, recently we found that the survey found that 1 in 2 respondents, 53%, are using stable coins for payments, overseas transfers, as well as decentralized finance.
Okay, that shift from trading tool to utility is quite interesting. It gives stablecoins more staying power, I suppose, in the wider financial system. Do you see them becoming a serious part of the financial infrastructure here in Singapore?
I think so. I believe so. Actually, at Independent Reserve, we have seen a lot of stablecoin-related flows as well. There have just been a lot of convergence and a lot of more trust in the system. The market cap of some of these stablecoins have grown, and people have been more confident about holding them and more confident because of the regulatory network change.
Okay, moving on to trust. The IRCI highlights what Singaporeans want: clearer regulation, responsible conduct from crypto firms, and more stability. Do you think we're striking the right balance right now between innovation and protection?
Yeah, that's a good question. So I think that Singapore is quite a conservative country, right? So naturally, we err on the side of investor protection, and I think that's the right kind of framework. However, we are also cognizant that over-regulation might be a little bit of a double-edged sword because, for example now, media restrictions serve to protect the public from risk, but it also reduces the visibility and recognition of regulated exchanges such as Independent Reserve. Unregulated exchanges, on the other hand, are operating on a completely different playing field, and that sometimes gives them more visibility and it attracts users despite their high risk.
Okay, what about crypto education? With marketing restrictions tightening, where can investors go for reliable, responsible guidance?
I think that it's important to look at where regulators and license exchanges do their part. So, for example, for me, definitely I'll recommend a visit to independentreserve.com, where you can find out more from the socials, the blogs, and you can probably ask some questions there as well, and support will reply.
And exchanges? What about the role of exchanges?
We try our best to do our part within the framework of what is allowed in Singapore. So we try our best to educate whenever we can, and however channels we can. But it's been quite selective. I think it's fortunate that Bitcoin is at an all-time high and there's a bit more increased attention again, and so that we can try to promote a message of safe investing.
Well, in any case, the good news is confidence isn't fading. In fact, 53% of current crypto investors plan to increase their holdings in the next year, according to the index. What's fueling that forward-looking optimism, you think?
I think it's success, right? People who have done well will continue to want to advocate it. It's quite polarized, right? So we see that among Singaporeans, only 20% are likely to recommend cryptocurrency to their peers, whereas among crypto investors, more than 50% are willing to recommend crypto investments to their peers, and specifically holders that are for a longer time period, people who have held cryptocurrencies for 6 years, 10 years, the numbers increase over how much they are more convicted. And this means that conviction is built over time as well as success.
Well, this seems like those still in the market are the ones who really believe in its long-term role, not just those chasing quick gains. So where do you expect capital to flow? More into Bitcoin and stablecoins, or are there quality altcoins still attracting attention?
Yeah, we think that Bitcoin is going to continue to dominate as a dominant asset. I think that it is currently trading at an all-time high, where some of the other cryptocurrencies in the market have not performed as well. Stablecoins will always have its use case as a conduit, as a sort of intermediary and a payments mechanism. Bitcoin, we believe, is a good alternative investment to add in a portfolio. It's a good long-term asset, and people are using it as sort of a diversification mechanism and a store of value that you can keep in your portfolio as like digital gold 2.0.
Interesting. Now, before we let you go, any unexpected findings or insights in this year's IRCI that really jumped out at you?
Yeah, one of the interesting ones I found is the method through which people purchase their Bitcoin. So we found that strategic investment has been paying off. So 77% of investors have bought on their own feel. So like sporadically, whenever they think the market is low or high, whereas 22% of investors have dollar cost average into crypto. What this means to say is that they are buying on a daily basis and consistently. And interestingly, 57% of investors with dollar cost average make profits, whereas only 40% of those who are buying sporadically and trying to time the market, which brings about the thesis that timing markets is more important than timing the market.
Okay. Well, something worth watching as we move to the second half of the year. Mark, thank you so much for your insights. It's a fascinating look at how crypto is evolving, not just as an asset class, but as a long-term fixture in investor thinking. Thank you.
Thank you, Lindy. For more information, please feel free to visit Independent Reserve.
Of course.
Thank you so much.
He is Mark Wong, Head of Trading at Independent Reserve, Singapore.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.